All right, welcome to the Explainer. So today we're going to dive into a market that is just packed with negative news. Everywhere you look, headlines are screaming sell. But you know the real story? It's way more complicated than that. Let's try and connect some of these dots.
Usually when you see this much bad news all at once, you'd think a big market drop is right around the corner. But what's so interesting right now is this dynamic where, well, it feels like all the bad news is already out there. It's already been priced in, so to speak. So that brings up a really big question, right? If literally everyone is already braced for the worst, what could possibly happen next? Well, let's take a look at a key indicator that suggests we might actually be at a huge turning point.
Okay, so check this out. This is the Bank of America Bull and Bear Indicator. And right now, it's signaling extreme fear. Now, what's so wild is that historically, when this gauge gets cranked up this high, it often means a market reversal is just around the corner. Look, it's not a crystal ball, it's not always right, but it's a really powerful sign that sentiment might have finally hit rock bottom. All right, first up, let's talk about our first big distress signal. It's a sudden shock coming straight from the world of crypto, and honestly, it points to a pretty deep vulnerability that I think a lot of people have been overlooking. So, if you just glance at Bitcoin's price, everything looks fine. Kind of calm, actually. It's just been consolidating. But what you can't see on the price chart is that behind the scenes, something really dramatic just happened. Something that has shaken the very foundation of the entire network.
And here it is. The global hash rate, that's the total computing power that keeps the Bitcoin network secure, it just fell off a cliff. We're talking a sudden drop of as much as 32% in just a few days. This isn't some small little dip, folks. This is like a massive, totally unexpected blackout.
So, what does a 32% drop actually mean? Well, to put it in perspective, analysts figured that's like 400,000 of those super powerful mining machines just going dark all at once. And pretty much all signs are pointing to this massive disruption starting in China.
And look, this isn't just some nerdy technical stat. A plunge this big, this fast, it signals a really deep disruption. It means you've got miners who might be forced to sell their Bitcoin just to cover their costs, and it really highlights just how vulnerable the network is to problems in one specific geographic area. It's a sudden, pretty powerful warning shot for the whole market. Okay, so let's shift gears now. We're moving from let's call it the established world of crypto, to the other huge story that's dominating every conversation, the big, intense debate over a potential AI bubble. It's hard to believe, but it's been about 3 years since ChatGPT just exploded onto the scene and kicked off this whole AI frenzy, right? Tech stocks went to the moon. But now, well, that initial excitement is kind of starting to wear off, and investors are starting to ask some really tough questions, like, can this rally actually last? And this chart really gets to the heart of the whole debate. If you put the AI boom side by side with the dot-com bust from 2000, you see some major differences. Back then, valuations were just nuts, like 80 times earnings. Today, we're closer to 26. And the really big difference is that unlike the dot-com days, today's leaders, your NVIDIAs, your Microsofts, are making an absolute ton of money. One expert put it perfectly. They said, "We are in a phase where real results matter, not just a beautiful story." And that just nails it, doesn't it? The age of pure hype is pretty much over. Now the market wants to see the receipts. It's demanding real, sustainable returns on all these billions being poured into AI. So, one of the biggest red flags that's got everyone talking about a bubble is this thing called circular financing. It's kind of wild. Here's how it works. You've got a huge company, right? They invest billions into a smaller AI startup. Then, that little startup turns around and uses that exact same money to buy, you guessed it, chips or cloud services from the big company that just invested in them. So, on paper, it looks like everyone's revenue is exploding, but it can create a really misleading picture of what's actually going on. So, yeah, the arguments for a bubble, they're pretty strong. You've got pioneers like OpenAI, who, believe it or not, are still unprofitable and just burning through billions and billions in cash. You've got the tech giants spending so much money on building out their infrastructure that it's actually starting to hurt their own profits. And the whole rally is basically being held up by just a few big names. But then, on the flip side, the reason for all the optimism is also pretty simple. The sheer amount of money being thrown at this, it's just staggering. We're talking about giants like Microsoft, Amazon, and Meta planning to spend, get this, a combined total of over $400 billion on AI stuff in the next year alone. That's just a completely unprecedented amount of cash fueling this whole thing.
So, where does all this leave us? Well, on one hand, we have this sudden, pretty scary shock to the very foundation of the crypto market. And at the exact same time, we have this high-stakes, multi-trillion-dollar argument happening in the world of AI. So, how do we make sense of these two things happening at once? And it all boils down to one critical question. Are these just, some temporary jitters in a market that's already on edge? Or are we seeing the first tremors of a much bigger earthquake? Maybe a reminder that even in this new world completely obsessed with AI, the basic systems we all depend on are a lot more fragile than we like to admit. Hey, if you found this explainer helpful, do me a favor and smash that like button. And of course, subscribe so you don't miss out on your next Daily Edge. We've got more news on our Telegram channel, the link's in the first comment. See you next time.